Good afternoon, everyone. Thank you for attending this webinar on what is the hottest day of the year so far. So very happy that you all are joining us here rather than spending the afternoon at the beach. But luckily, we have a lot to tell and to inform you about. So we'll make sure that this is an interesting session and yeah, hopefully very beneficial to you. We'll start off with some introduction and for housekeeping messages. You feel free to ask any questions during the webinar. There is a question field where you can put those, and we'll do the Q&A session at the end. Also at the end, we will ask you to fill out a survey. So we would be very happy to receive your feedback. So if you can fill out that survey, that would be great. This webinar will be also recorded, and you will receive a link to the recording afterwards in your email. Yeah, so let's get started. So to briefly introduce ourselves, my name is Renik van Oosterbos, and I'm a director in the Audit and Accounting Advisory team of Forvis Mazars Netherlands. And what we do is we support clients in their anything that is related to external reporting. So this can be accounting questions, writing position papers, supporting in audits, and one of the subjects where we also specialize in is digital reporting. So we've helped multiple listed companies in the past years with their ESEF reporting. We'll touch on that also, what that is. And going forward, we'll also help companies deal with these new requirements for standard business reporting. Joined today by my colleague Mark.
Thank you. My name is Mark van Vliet. I'm a senior manager at the professional practice in audit. And my role is to assist audit teams when they have technical questions while performing the audit. Besides that, I'm also a member of the SBR Assurance Task Force of the MBA. And that SBR Assurance Task Force is dealing with SBR, of course. And since 2020, we have experience with ESEF, which is applicable for listed entities, and it also applies IXBRL. So that's very briefly my background. I'm happy to present today what we know about SBR.
Yeah, so let's go to the agenda. We'll start off by introducing this topic, talking a bit about the scope. So who is this important for? Also explain a bit on the background. Then we'll go into some of the technical aspects of this topic. We will not get very technical, so you don't need to have a software engineering degree to follow this webinar. Nonetheless, it's good to be aware of certain technical aspects as they also introduce complexities. So when you will be implementing the new requirements, it is important to be aware of certain things and be prepared for them. So that's the background of this topic. Then we'll also look at the distinction between the financial statements that are prepared by management on the one hand and the financial statements for filing purposes. We'll go into how you can best prepare for these new requirements. After that, we'll focus on how will this impact your audit, because this will be applicable to large companies and their medium-sized subsidiaries. So those are all entities which are subject to audit, and there are some relevant aspects to highlight there. And I will finish the session with a Q&A. So again, if you have any questions, feel free to put them in the questions field, and we'll address those at the end. So Mark, can I ask you to explain a bit about the scope and the background?
Yeah, sure. In this table, you see the scope of SBR. You see the size of the entity that's on the left-hand side. You see the year when it has been come into force, or it will be into force. And on the right-hand side, you see the numbers. You see there are quite some companies, quite some annual reports that need to be drafted in SBR. The good news is that micro, small, and medium-sized entities already do that. So they report in XBRL as of today. The listed entities also do that, but then with inline XBRL, they apply ASEF, European format. And then, which also is in scope as of 2025, it's the large size entities and the medium-sized entities that were exempted. So the bad news is that there's no exemption anymore. But the good news is that there's a lot of experience in the Netherlands with SBR, both XBRL, that's one version, and the inline XBRL version. Now, all has been decided in the besluit elektronische deponering handelsregister. We call it briefly the decree. It has been amended. And on the next slide, you see the timeline of that decree. So if you're interested in the background, you can see how it's been drafted. And it has been in effect now as of the 1st of January 2025. And what is very important that the translation has been made into the regulatory technical standard, the RTS. So that's a abbreviation that you hear a lot, the RTS. And the practical application, that's the reporting manual. So if you want to see how you implement or how you apply SBR on specific topics, you can have a look at the reporting manual. And if you want to know more, you can go back to the RTS where you see the technical requirements. It's the same setup as for the listed entities that apply ASEF, European reporting format. And I must say that experience is quite well until today. So, but this is briefly the documents that you need to be aware of when you draft your financial statements in SBR.
Yeah. What I think is important to mention is that I said the setup is very similar to indeed what you mentioned, the listed companies. So if I just go back here, the listed companies have already, some or quite a lot of experience with the topic of inline XBRL, and we'll go into the technicality in a bit more detail, but it is expected that we see a number here of 10,000, so 5,000 large companies, 5,000 medium-sized subsidiaries of large companies which were previously exempt. It is actually expected that what they will need to do from reporting years starting on or after 1st of January 2025 is similar to what the listed companies are doing. And later on, we'll also have some lessons learned from ESEF. So ESEF is the European Single Electronic Format, which is a EU regulation that has required listed companies in Europe to report digitally for some years. So some of these companies will do that come into scope now will do something similar to what the micros, the small, the medium-sized have been doing. most of them will probably need to do something similar to what the listed companies have been doing. But we'll get on to those details and also the lessons learned from ESEF later on. And we see this also, these lessons we see also reflected actually in these documents. So the regulatory technical standard and the reporting manual, although the SBR domain reporting manual is quite a bit shorter than the ESEF reporting manual that ESMA has issued. So I'm not sure whether that's a good thing or not, but well, um, I think there's in practice everyone will have a lot of experience from ESEF, which will be used actually in fulfilling all these new requirements. So let's get on to the more technical side of things. So there's two formats for filing. So we know previously, or up until now, including financial years 2024, those large companies and their medium-sized subsidiaries, which were exempt from filing digital financial statements, they have done mostly PDF financial statements, which you could submit to the Chamber of Commerce, the trade register, or they were also still allowed to file on paper. So you could print out your annual report, put it in an envelope, and send it to the Chamber of Commerce to satisfy your filing requirement. So now we need to go digital, and there are two formats to do that. And one is the XBRL format, the other is the inline XBRL format. So what is an XBRL format? We also refer to that as an SBR instance document. And basically that is a document that uses a fixed framework for reporting according to predefined entry points from the KVK, Chamber of Commerce taxonomy. So what a taxonomy is, we'll explain that a little bit later, but it's important to stress that it's predefined. So there is a structure into play, which is in place, and you need to feed data into it. This has been widely applied already for years, and this has been how micro-sized companies and medium-sized companies have been reporting for the last few years. And then on the other hand, we have the inline XBRL format, where that is actually and the basis is an XHTML format, and an XHTML is essentially a HTML file like we know from a website with XBRL markup embedded into it in accordance with the inline XBRL specification. And what this allows is, just like a website, you can make it look how you want it. So you have flexibility in the layout, and actually your financial statements, your digital financial statements, will be or can be equal to the human readable version, so your PDF or what you have on paper. This is what the listed companies under the ESEF regulation have been the format that they have been using for the past few years. and within the Dutch environment, the Dutch specific environment, this is a format that is new based on the amended decree. One thing that is also important to note here is that working with this format, you're required to use what is called an ESD, extension taxonomy, so entity-specific disclosure extension taxonomy, combined with an entry point from the Chamber of Commerce taxonomy. And using this entity-specific taxonomy allows you the flexibility of adding concepts onto what is already in the Chamber of Commerce taxonomy. And that is a flexibility which you do not have in the XBRL format. So that is a benefit of using the inline XBRL format. I think the inline XBRL format is I think commonly accepted as being let's say the superior format. It is also there are some more things to it. We'll get to that. But and I think generally speaking, the XBRL format is regarded as the easier option. So just to put it visually, in the XBRL format, we put in data using predefined entry points. Using that results in having structured data set, so something that a computer can read, and as a result, you have a file which is basically not readable for humans. So as a result, if you want to read this file, you need to actually render it. So use a tool to render it, and there's some based on what is called the consistent presentation concept. It is rendered, so there are rules to this rendering, and as a result, then you end up with a human readable document. We'll have an example to see how that looks actually on a later slide. But I think most participants will probably be familiar with this format, because when you want to file your financial statements for a micro or small or medium-sized company, what is often done is you log into the Chamber of Commerce website. There you have actually a tool to file financial statements, and that tool you put in your balance sheet, you put in your P&L, and there's all predefined fields, and those predefined fields, those allow or let's say those allow to create a structured data set. But you'll also notice that you can't really deviate from that standard format. So as a result, you have structured data, but there's no way to give it your own flavor as a company, let's say. They solve that problem by introducing inline XBRL. So there you have actually all the freedom to make the document look as you want it using the HTML, and then add the XBRL sort of as a separate layer onto it. So embed the structured data in the HTML file. And as a result, then you have what is called a reporting package, and a reporting package is typically a zip file, or now actually we'll be using a new type of extension, an XBRI file, inline XBRL file. but that's basically a zip file with the HTML file plus any additional files which are required for the technology to work basically. So what we sometimes see is people unpacking this file or adding things onto it, but that's what you're not supposed to do. So this is just the end product is this zip file basically, and then well you can use a reader or another type of tool then to read the inline XBRL file, as you actually also need for an XBRL file because you need to render that. So this was just to highlight some of the differences between the two formats.
Yeah. Yeah, what you see in practice is that the XBRL is usually referred to as the instance, and the inline XBRL is referred to as the reporting package. So it takes some time to get familiar with the wording used. But if people talk about the reporting package, they usually refer to the inline XBRL package. And if they talk about an instance, it's the simple version, it's the XBRL. And also, if you want to visualize it, you can refer to it as the XBRL as a standard suit. And I think the inline XBRL can be compared to a tailored suit. So if you
that's a nice analogy indeed. Yes. The question you're probably asking yourself is, okay, that's nice, but which one do I have to do, or which one can I do? And that is, we have put that on the slide here. So the question or the answer is, it depends. So if you prepare your financial statements in accordance with IFRS, the International Financial Reporting Standards, you automatically have to default to the inline XBRL format. And that is also true if you use a combination of IFRS for your consolidated financial statements and Dutch GAAP for your company financial statements, also commonly referred to as option 3 or combination 3. So if you're in that bucket, automatically you need to do inline XBRL. So if you prepare your financial statements based on Dutch GAAP, then in principle you would be also allowed to use the XBRL format, but there are some exemptions or exceptions, I should say. So if you will be required to report CSRD information, so your sustainability information, if you fall under the legal scope of that decree, then also you need to default to the inline XBRL format. If you include any company-specific items in the financial statements, also you need to default to the inline XBRL format. So that may be, as an example, in your P&L or in any of your primary statements, you don't exactly follow the requirements of the BMJ, the besluitmodellen jaarrekening, so the decree on model accounts. That means it's not entirely standard, so it doesn't fit with the XBRL format. Hence, you need to do inline XBRL. And we see that regularly, for example, in P&Ls, where income statements, where companies have a bit of a mixed model between for the presentation of the expenses. So expenses by nature or expenses by function. If you mix that up slightly, it will not work with XBRL. Or if you actually present a non-GAAP measure in your income statement, such as EBITDA, those kind of company-specific deviations from the standard model don't work with XBRL. Hence, yeah, you need to then do inline XBRL. That also applies if you adjust the layout or presentation in any way, um, or when practically speaking you would not be able to file an annual report in XBRL format. Take for example um, annual reports which include a director's report with a lot of visuals or graphs maybe. This is information, or there's information in there which would not be able to work with the XBRL format. Hence, you would default to inline XBRL. And for these reasons here, it is actually expected that most of the companies to which these new requirements will apply, they will actually need to do inline XBRL because they would fall, in one of these categories. As I mentioned, I would go in to a bit of detail on what is a taxonomy. So I imagine that is a term that not everyone is familiar with, but basically I would explain that as a sort of a book full of terms, full of concepts, which you can have in a document. Those who have experience with ESEF will know the IFRS accounting taxonomy. We also have that on screen here. And basically what that is a file with some, I believe it's like 8,000 different accounting concepts coming from IFRS standards. And there's a waterfall to that. So you start with the balance sheet, the income statement, and the primary statements, and then it goes into more detail of each standard with all the concepts which are identified in those standards. They are coming back in the taxonomy. So it's a collection of all possible, or a lot of possible concepts coming from the standards. And we have the KVK, or the Chamber of Commerce taxonomy, which is then a combination of different subsets of taxonomies, which together would form the basis or the collection of concepts which can occur in a set of financial statements and an annual reports in the Netherlands. So we have the J&V taxonomy. So I'm not going to mention them all, but here I mentioned the decree on model accounts is in there. We have decree on financial statements of banks, so that's something industry specific. So these are all kind of legal sources under this J&V taxonomy, legal sources from which concepts which are relevant to a company's annual reporting can come from. Then for public sector, there's a WNT taxonomy, and then for Dutch GAAP appliers, there's the RJ taxonomy, and then for IFRS appliers, there's the IFRS taxonomy, and all those taxonomies combined actually form the Chamber of Commerce taxonomy, which companies will need to apply in meeting the new requirements. So I explained already about the XBRL format. Here we actually see a rendering of that. So if you look up any micro or small company in the Chamber of Commerce in the trade register, then you click through and get their financial statements. Then what you get is this. So this is probably familiar to a lot of people. And here you see the standard format. So it follows, you have the financial statements, then the company financial statements, balance sheet, disclosures. So this follows this predefined format. And you see not everything is filled out necessarily, but nonetheless, you have to follow. It follows this standard format, standard structure. And what you also see, it is a bit boring looking, of course. So it's a rendering of an XBRL file. So the Chamber of Commerce actually has a tool, to make this a visual representation of the XBRL document. And this is the result. So there's no room in here for nice pictures or nice colors. It's what you see is what you get. So this is how a set of financial statements would look like rendered from an XBRL instance.
Yeah, and what we see is that even for micro, small, and medium-sized entities, sometimes a squeeze to get the model into this. It's despite that they don't have many company-specific items, you see that it's sometimes you have to wish to add lines to it, but that's not possible in the instance.
Yeah. So then, if we switch over to inline XBRL, there is an important concept of what we refer to as tagging requirements. Again, this does not apply to the XBRL format, because then you put in data based on predefined fields. So it's, let's say, automatically tagged with the correct underlying concept. Whereas if you use the inline XBRL format, you start off with an XHTML file, which you can give the appearance as you want, but still you're required to embed structured data into that file. And how you do that is by tagging information in the report, by giving it, let's say, the underlying concept and other relevant data. So actually a computer can understand what this number or this piece of text actually represents. So there's different types of tagging, and one is there's detail tagging, and one is block tagging. When we speak of detail tagging, that means every individual number in, for example, balance sheet, income statement, cash flow statement, needs to be individually tagged. So you have to mark up that number to give it the context that the computer will need to understand that number, let's say. On the other hand, there's block tagging, and that is used for actually larger volumes of text, such as the disclosure notes, where you let's say take for example, an entire note, and we'll have an example on the slide a little bit later. Take an entire note and put one big tag over it, basically referred to as a block tag. So what is also good to note here is, so on the left we have the table with the different parts of the report that need to be tagged. And it's good to know that that is also actually different than what we're used to from ESEF, because under ESEF the tagging requirement only pertain to the consolidated financial statements. So if you, as a company, did not have consolidated financial statements, you're actually exempt from marking up the financial statements with tags. So that is different here because every company using the inline XBRL format will need to do this. Those requirements will apply to the consolidated financial statements unless there are only individual financial statements. So if you have no consolidation, then these requirements apply to the individual financial statements. So that is the difference. And also we see here the director's report and the other information. Those will need to be block tagged as well. So that is not something we've seen before under ESEF. So that is, there's more to tag going forward. Important to note though that the block tagging, and we see that applies to the director's report, the disclosure notes, and the other information, that there is a temporary exemption from applying those block tags. So for 2025 financial years, that will not yet be required. It might become applicable as of 2026, but it might also be the case that it's going to be, or we hear sounds that it's likely going to be extended maybe to 2027 even. And the background of that is all of this tagging and the technology is aligned with what we're used to from ESEF, and there is a discussion going on on European level, basically, on how you should actually do block tagging and apply the requirements of the reporting manual. And there's a consultation ongoing, so it's likely that the Dutch requirement for block tagging, before that enters into force, they'll actually wait until that consultation is finished and it's clear, how you should apply block tagging. So what is left now for 2025 at least is the primary statement. So we have a balance sheet, we have the income statement, we have a cash flow statement. Then for some companies, the overview of comprehensive income, or the overzicht totaalresultaat, for those that present that, those will be required to be tagged in detail, so each individual number. The equity movement schedule in the disclosure notes as well. And then we have filing details. I have a slide on that a little bit later. And that is needed to give the Chamber of Commerce basically the context to accept the filing. So going a little bit deeper into what is actually required when marking up the financial statements. So touching on some requirements of the regulatory technical standard. So when you are marking up a number in your primary statements, you need to select from the base taxonomy an element with the closest accounting meaning. So to give an example of that, let's say you have on your balance sheet, you have a line item which is called tangible fixed assets. You would then go to the taxonomy and look, so which concept in taxonomy matches the item that I have, tangible fixed assets, in my balance sheet. Then you'll probably end up you should end up at the concept called property, plant, and equipment. So even though it's different words, it has the same accounting meaning. Hence, that's the concept you would select. Of course, this is an example where it's it's very straightforward, which is probably the case for 90% of the line items you have in the financial statements. But it can also be possible, and I think from what we've seen from ESEF, each and every set of financial statements has this, is that there are line items where there is no exact matching concept in the taxonomy. So what you need to do then is use what's called a extension taxonomy element. So I mentioned earlier you're required to use an ESD taxonomy. So what that allows you to do is extend the base taxonomy by introducing your own company specific taxonomy elements, which you can then use to mark up those items in your financial statements. If you do that, you are required though to anchor those extension taxonomy elements. In other words, you need to look at, okay, I have this concept, I have defined it. What is the concept in the base taxonomy with the closest wider accounting meaning? And then you need to anchor that. So the machine will know, oh, this extension element is a subset of that concept which I know from the base taxonomy. And to give an example from my own practice, is a company which had contract cost assets in the scope of IFRS 15 on its balance sheet, with a division between part of that was non-current on the non-current assets, part of that was on the current assets. But actually in the IFRS taxonomy there was a contract cost assets concept, but there was no split there between a non-current portion and a current portion, as there are many concepts where those non-current portions and current portions are defined. Here there wasn't, hence this required two prepare extensions, one for the non-current portion, one for the current portion, and those were both anchored to that single concept, contract cost assets, in the base taxonomy. So that is what's called wider anchoring. The other way around, you can also have a concept which is actually a combination of existing elements from the base taxonomy, then you may, but don't have to, apply narrower anchoring. So this is some background on how that works, this marking up. To make it come alive a little bit more, we have here on screen actually an example from a practice where we see a statement, and we see different colors on the numbers, and those colors are generated by the inline XBRL viewer that is used here. So we use a viewer to actually read this inline XBRL report package, and we see those numbers marked in green. Those represent marked up numbers, and then we see, for the selected number, you see on the right, you see the fact properties, and then you see which concept from the taxonomy, in this case revenue, that has been tagged, and some other additional information. So if we look at this, at the human readable version, we would see immediately, top left of the table, um, there's the scale, um, and we see, oh, it's on this line, so we know, oh, this is revenue. We see it's in this column, oh, so it pertains to this period. But in order for the computer to see, to understand all these kind of information, actually that needs to be, so that metadata needs to be attached to this number. So that's why we see on the right, we see the date. So which period does this pertain to? We see the scale. Is it a debit or a credit? What is the value attached to it? So all those um, elements that give context to this number for the computer to understand it. So this is, and you need to give, when you're marking up the financial statements, you need to basically provide all that context. So that is part of the exercise that we call tagging the financial statements. And we see this sort of dark purple, two numbers also on this visual. Those are actually where a preparer extension was used. And then very briefly, an example of block tagging. So here we have a disclosure note for property, plant, and equipment. And we see that actually the entire note, so the title, the whole table underneath, the whole movement schedule of PP&E, and on the right also, any additional text that is part of this disclosure note has been tagged with the concept disclosure of property, plant, and equipment. Then there are some mandatory markups which you basically always have to use. So those are defined in the Appendix 2 to the Regulatory Technical Standard. Those are listed here. So the Chamber of Commerce registration number, the name of the entity, the statutory seat, whether it's a large company, medium-sized company. So this information needs to be included in any inline XBRL report package, any and every report package, because without it, the Chamber of Commerce cannot accept the filing basically. So this is required, and actually this is a lot less than the requirements that we know from ESEF, because there's a whole list of mandatory tags. So this is a bit simpler. Then I just wanted to briefly highlight the concept of link bases, because we have the XHTML file, we have the numbers, and later on also the disclosure notes. We'll have tags put on those. So we have a nice looking document that is the same as our old PDF, and then we have the structured data, sort of as an extra layer embedded into that document. But that doesn't mean that that is it. For the computer actually to fully understand this digital report, it needs to have other information. So, and that information is included in what is called link bases, and those ensure that there's the document is structured and gives an understandable representation of the information contained therein. So I don't want to go into these in a lot of detail because that is too technical, but just as an example, there is what's called a presentation link base. So if we look, with our own eyes at a balance sheet, we see what is the order of the items that are included on that balance sheet. But actually, the computer needs to also be made aware. So that order needs to be programmed in to what's called a presentation link base. So the hierarchical view of the data is programmed in there. Another important one is the calculation link base. So this specifies calculation relationships between numbers. So for example, if we have a balance sheet with tangible fixed assets, intangible fixed assets, financial fixed assets, and then we have a total non-current assets, our brain would know, oh, this subtotal is the sum of those three items above, but that relationship needs to be programmed into the inline XBRL report. I think that sort of concludes. So what I wanted to mention on the technical side of things. So I'll hand over to you, Mark.
Yeah, going back from the technique to the process. What's good to know is that the degree it's aimed at filing the financial statements. So it's the publication financial statements. But first you have to prepare them, of course. So that's also called in Dutch the inrichtingsjaarrekening, the prepared financial statements. And while you prepare those financial statements, you have the choice, will I do it digital or will I do it on paper? And also PDFs are seen as on paper. So that's an important decision for you as a company to make. So if I draft my financial statements, how will I do that? Will I continue it in the old way, or are you going to choose for digital? And of course, if you choose digital, then you have the XBRL and inline XBRL option. But that choice also affects the further process, and it also affects the auditor's opinion, because the audit opinion will need to have the same format as the financial statements as they have been drafted in. So it's important that when you make that decision, you also inform your auditor what route you are going to take. If it's XBRL, it can be signed fully digital, the instance. It's like the small and medium-sized entities do it right now. If you're going for the inline XBRL option, you will go the ASAP route. So what you do is that include the auditor's report in your financial statements, and we give our approval that it is included, and then you will file it digitally. So that's a bit different route than the XBRL route. So those are the two flavors. The MBA is working on signing off digitally, also on the inline XBRL. Then, of course, it needs to align with European standards. So that can take some time before it comes into effect.
Yeah, should we move on?
Some practical aspects. If you're going to file, you can choose to use DigiReport, or you can upload financial statements to the website of the Chamber of Commerce. What you need to do is plan it timely, because if you're going to upload it, you need to ask for a login. That can take some time. It's usually 3 to 5 working days, but you can imagine that before the final deadline, it can become a bit more busy. And also there are limits of uploading the file. There's a limit of 100 megabytes. So if you have fancy pictures, you need to be sure that it doesn't exceed that limit. So this also requires, I think, an early choice and also planning ahead to make sure that you meet the filing deadline. So that's some practical aspects.
All right. So let's say looking forward. Um, yeah, companies are wondering. So how do I get started with this? What do I do next? Um, I think well, what is first and foremost important is to realize that um, yeah, the time to get started is rather sooner than later, because yeah, what we know is that the conceptually it all seems or it may seem straightforward, um, and the marking up the financial statements, or you may have the notion that, oh, I just need to mark up my financial statements, but there's a whole process around it. So it's good to start this project and this change early, because yeah, before we know it, we'll be in the sort of year-end close busy season, uh, with the financial statements getting prepared, and then once they're prepared, then you only have 2 months to have them adopted, and then another 8 days to file them with the Chamber of Commerce. And I can definitely say this 2 months would be very hard to realize all of this. So that means actually before you head into the reporting season, yeah, you need to make sure that yeah you have everything set up basically. So what does that mean? Um, Probably starts with assessing, okay, who do we want to be on this project team? So setting up a project team, selecting people from your finance department who will be, working on this. And an important aspect is, becoming familiar what with what is required. So the fact that you're attending this webinar is already a very good start with that, and familiarizing yourself with the requirements. And probably a very important choice will be, will we use the XBRL format or the inline XBRL format? So we hope yeah, you're much better equipped after this webinar to make that decision. But I would also like to mention that it is important to yeah, stay in touch with your auditor also throughout this process, and make sure they have yeah, your views are aligned. And then the next big question is, once you've answered that question, do we go with XBRL? Do we go with inline XBRL? Is, do we revise our current reporting process, or do we add on to our existing process at the end? So there's different scenarios here, but it may be the case that currently you're preparing your financial statements in Word with a set of tables in Excel, and you can't combine that and produce a PDF. It may also be that you're already using a software to prepare your financial statements, prepare your annual report, um, and that software may or may not have XBRL or inline XBRL capabilities. So there's really a range of possibilities, but I guess the main question is, do you want to keep things as they are as much as possible? Do you feel that you already have an efficient process, um, which you don't want to change? Then it's more likely you would sort of put this as an add-on at the end of the process, or it may also be the case that you feel, yeah, we can improve on our current process, and to revise the whole process, to yeah, come to a more digital process with a digital output, of course. And there's really various flavors within that. Um, Another thing which we put on the slide here is PDF conversion or HTML native. Like a PDF conversion, so different tools to do this, to produce an inline XBRL file. Something we see often is a PDF conversion. So where you start the process with, this is our PDF annual report, and then basically that is converted into an inline XBRL document. So the structured data is then embedded in the PDF converted to XHTML. Or there's also software packages out there which are HTML native, so they already produce an XHTML file, which you can then include the structured data already within your existing solution. If you don't have a solution yet, there's really two main options which you have. If you need to prepare an inline XBRL reporting package, and that is select and implement a software package especially designed for that, or use a specialized service provider who will help you with that. So these are really important choices to be made when preparing to meet these requirements, and only then you get to the the preparation for the tagging. So that is just a portion of the process you need to go through to get ready. What we've learned from ESEF is that it's and I'm stressing it again, but it's important to start this process on time. So this 2 months, I think it will be very difficult if you just utilize that time. So start on time. In our experience, we know that this will require us several iterations of the report to get it right. And from ESEF, we know that in initial versions we see many errors coming up. So I mentioned that the numbers, the marked up numbers, need to have different attributes included, tagged to it. So is a number a debit or a credit? What's the magnitude? So is it in thousands of euros or millions of euros? Are you selecting the right concept from the taxonomy, or should you include a prepare extension? Or where you have included a prepare extension, are you sure that there is no suitable concept within the base taxonomy? So those kind of items, calculation errors, I think, is another one that we frequently see. So there's going to be several versions necessary, with a combination of different checks on them. So it can be manual, semi-automated, or automatic checks. We also know that different tools have different validation software, so can result in different findings. We'll touch on what the auditor will do also. So there's going to be several iterations necessary to sort of iron out all these things, yeah, smaller or bigger issues and errors, to get to a product that is ready to be filed. And what is also advisable actually is to actually use, for example, the 2024 financial statements or a dummy report and do a dry run of the tagging, which allows you to sort of tackle these kind of issues at an early stage. Then, yeah, we're going to look at what is the impact on the audit.
Yeah. Yeah, I'll do it on a high level, also looking at the time and perhaps the temperature at your place. I don't know how hot it is at your place, but it's getting hot. If you look at the Audit Alert 50, it's aimed at auditors to describe their responsibility on the SBR financial statements. But it's also good for a company to read that Audit Alert. It has a summary of the combinations you can have in a sort of decision tree. And it also explains the different wordings that are used. So even if you're not an auditor, but if you need to draft an SBR package or SBR instance, it will be good to see the stand of the alert, to understand that it's an alert, and also to know what your auditor needs to do on your financial statements for filing purposes. Because from the legislation, it's not so clear what the auditor needs to do for the inline XBRL financial statements. And with this alert, the MBA gives guidance what the auditor at least should do. In this slide, you see a simplification of the audit tree that's in the alert. You see that you can have an SBR instance or an SBR reporting package. So there are two options, and with the two options, you can have both. You can have them on paper or you can have them digital. And both affect the further process of the audit. So if you go to the...
I think what's important to note here is we're talking about the format of the financial statements prepared by management.
Yeah.
So all financial statements need to be filed digitally, so either as an SBR instance or as an SBR reporting package. But yeah, again, you have the option for the financial statements prepared by management that will be later adopted by the general meeting to still have that on paper, or on a voluntary basis also digitally in either XBRL as an SBR instance or an inline XBRL as an SBR reporting package.
Yeah. If you go to the SBR instance, the auditor needs to define if it gives a true and fair view, the financial statements, because that's the audit opinion is about. And if it's on paper or PDF, there's tooling needed to also define that. If you look at SBR instance, it's legally defined, the auditor's role. So that's, I think, the most clear situation. But the more difficult one is inline XBRL. So on the next slide, and there you see that more work is needed. So here you also have the different options. And to make it a bit more complicated, there's also an option to ask for assurance on the inline XBRL report. So you can ask your auditor to fully audit the SBR reporting package. If you do not do that, then you have the top level situation, and the auditor needs to do minimum procedures to see that the report that's generated is still has a true and fair view. And here you see the different options how to get there. But in this process, it's good to see that you make as a company decision, what do I want to do? Am I going for a minimum, or do I want my auditor to fully audit the inline XBRL financial statements? But overall, both options require more more work because we need to do an extra effort. But of course, you can imagine that you do not want to have wrong financial statements that are at the Chamber of Commerce with an audit opinion. So that's the background that the auditor has to do a minimum set of procedures to see that those financial statements are correct. Don't know if you have anything to add.
Yeah, I think in here when we're talking about how to prepare for these requirements, there's sort of also another couple of questions coming out of this, which companies need to consider. I already mentioned, do you want to actually do your financial statements which are prepared by management? Do you want to do those also in your digital format? Because it's important to note that the financial statements which will be filed with the Chamber of Commerce in the end, that is the set of official financial statements out there. Actually, if you put a PDF on your website next to that, that's all fine, but that PDF is not the official annual report. Only the one that is filed with the Chamber of Commerce is the official annual report. And it may be, it may be the case. We know this, of course, from the situation of the listed companies, where actually the prepared financial statements are also the filed financial statements. So there's essentially one set, because the prepared financial statements are made public. So they're the ESEF format, the digital format, is the one that is made public, which is the set that is prepared by management. It is an important choice also whether you want the set that is prepared by management in a digital format, or if you want to keep that in a paper PDF format and only do the digital filing for the financial statements for filing purposes. And then the next is, do you want your auditor to actually audit the digital document? And if you're going to do the digital version, the SBR version, as your prepared set, so the set of financial statements that are prepared by management, similar to what happens with listed companies, it will need to be audited. But if not, do you want this voluntary audit or not? And that is also something which you need to, of course, discuss with your auditor on a timely basis, because it will require capacity, and it has impact on costs, of course. So I think important questions to start thinking of this during the summer already. Then how can we help you? In case you are wondering that. So we will continue, of course, to provide you with relevant information as and when it comes. I have here a picture on the slide of our brochure on this topic. So that gives sort of a summary of what we've discussed in this webinar. Of course, you've attended the webinar, and we'll continue to provide information on as needed basis. Of course, if you are an audit client, we would be also happy to do a voluntary audit of your SBR report package, should you choose so. And next to that, we can assist you in the preparation of either an SBR instance or an SBR reporting package to help you get ready for meeting the new requirements, or even outsourcing that to us. Important to note though that if you are an existing Forvis Mazars audit client, there is still some discussion in the market on how this would interact with auditor independence requirements. So that is good to note, and I think that will become clear over the course of this summer on how that will interact with the fact that we are doing an audit. But if you're not a Forvis Mazars audit client, there's of course no independence restriction to support you in any of this. I think that concludes what we had to say. We'll go over to some questions now. We had some questions come in. So one question here is in terms of the entity size, is that the reporting size or the real size? So this respondent is part of an insurance company, OOB, and they're reporting as large. But if you look at the legal boundaries, they classify as medium-sized. So you want to take that one, Mark?
Yeah, I think we need to have a closer look how it classifies. I don't know if you can say it by heart, but on the PIEs, I like to double check that.
Yeah, I think what is important to note though is that what we've talked about now, large or medium-sized, is how you report, and that can be either based on the boundaries. But for example, if you do IFRS, if you just look at the boundaries, you can classify as a small company even.
Yeah.
But if you do IFRS, you automatically are treated legally as a large company. So you actually would fall into all the requirements for a large company, and filing requirements are one of those. So I would say generally here the sort of reporting size would be leading, I expect. We have another question. Is it possible to make a dry run on the annual report 2024? You want to take that?
Yeah, of course it's possible to do a dry run. The question is to what stage can you do it? At this moment, there's no testing facility at the Chamber of Commerce. But of course, you can see if the financial statements go through the audit software check. So that's possible. And I would also recommend to start doing it with the 2024 financial statements, because it takes some time before to get to the end result to be able to do a dry run technically. So I would definitely say yes.
Yeah, I think in the initial days of ESEF, the AFM had or actually facilitated, technical validation through the AFM's validation software through the website. So KVK does not have something like that, or at least yet, but I'm not aware that this will be put into place. But nonetheless, if you are starting out with this, the tool that you will have, or the tool that you will use, will have some validation in there. So if there's anything wrong, it may be that the tool actually will pick that up.
Yep.
If you later open the file in an inline XBRL viewer, then also that there'll be some validation, so there may be some warnings or errors shown, which you can then address. So there's really yeah, different checks and balances along the process, and I think the auditor will definitely also be one of those checks and balances. So I think it's definitely advisable to do a dry run, and you can definitely use your annual report 2024 for that. Also good to in actually selecting the software if you're going with a dedicated software package. It would be good to see if you tag a report, whether that tagging is carried over into a next year. So if I think that is generally facilitated with the providers I have seen. So that makes it easier, let's say, to if you do it on 2024 to carry that over to 2025. Another question is a large company automatically covered by CSRD, and therefore does it automatically have to make or have to use the inline XBRL format? I think there's well, the sort of the short answer is no, not automatically. And we've earlier this year seen the omnibus package, which actually reduces the scope of companies that will fall under CSRD, and also pushes the timeline to later. So, but it's definitely good to check on where you are at in terms of CSRD scope and timing your company, because that will play a role in making the decision, or should play a role in making the decision. Do I go with the inline XBRL format or not? Because it probably would not make too much sense if you would go with the XBRL format, where 2 years down the line you would still need to transition to inline XBRL format. At least in my view, it's better to do it once and do it right.
Yep.
Maybe another question. So which components of the annual report must be filed electronically via SBR?
Yeah.
You want to take that one?
Yeah. Yeah, it's the balance sheet, P&L notes, and the management report. So it's the full report that needs to be filed.
Yeah, indeed. So in the end, the XBRL instance or the inline XBRL reporting package will encompass the whole annual report, so all parts of that annual report. Okay, I think we've tackled the questions. So I would like to thank everyone for attending the webinar today. I hope you have found this useful. Again, we would really appreciate it if you take the time to fill in the survey, and yeah, and I hope you enjoy the rest of the day and enjoy a bit of the hot weather where possible. Thank you very much.
Thank you.